It's Jeremy Williams with the Bannock Real Estate Group, and I just want to let you know we put together these videos because it's really important to us that we get relevant, accurate information into the marketplace as the market changes so you can make the best decisions. If you like the information we're providing, please subscribe. It makes a big difference for us. And then also, if you'd like to see a certain video about a certain topic, make a comment. We'd love to hear from you. With that, let's get into it. In today's video, we're going to talk about May 2023 real estate market for Missoula, Montana. And I'm particularly excited because not only are we going to be talking about the changes in the market, but obviously we're starting to see a change in the seasons as well. And we're moving from a typical winter market and more into a spring, summer market, and go over the data, see what we could expect for the next couple months. Right now, we're seeing an inventory constrained market. We're going to talk more about what that might mean. Every month we analyze the data to make sure that we can get the most accurate information out to you to make more informed decisions before you read about it in the traditional channels. My name's Jeremy Williams of the Bannock Real Estate Group, and it's important that we get hyper-local information out. I'll give you an example. Last week I watched a video from a local news source that talked about 3 to 5 times more homes that were on the market than actually were. I don't know where they got their data from, but it's important that you look for different avenues so you can make the right decision for what you do next. So with that, let's get into it. So one of the first indicators that we're going to look at is inventory of homes. How many homes are on the market at any given time? And what we've noticed is a 4-month trend where it's relatively stayed consistent. Currently there's 133 homes for sale, which was interesting to see that because I looked at the data from last year, May 2022, and almost the exact same number of homes were for sale. What's interesting about that is last year's market was very different. We were still in a pandemic market, rates were still low, things were moving fast, and we still have the same amount of inventory from month to month. Now, I do expect inventory to increase a little bit over the next couple months, but not dramatically. And there's a couple of reasons why I think that. First, well, there's a lot of homeowners that are staying put in their homes because they're at really low interest rates. Also, we're starting to see home buyers, instead of selling their homes, put inventory on the market and then buying another one, they're actually keeping their existing house and still moving into that next house. So that inventory is not coming on the market. We're starting to see investors, they're not selling their properties, continuing to buy again, hedging against inflation. And also, I read a report that we're at an all-time low for deficiencies in mortgages. So we don't see like a foreclosure boom coming. So if you're waiting for the right house to come on the market, you're expecting a lot of other homes come on the market or prices to come down, you could be waiting for a little while. One of the leading indicators that we use in our market reports that we don't talk about too much in our channel is pending listings. When we look at sales, usually that's historical. It's 1 month back or a year back. Gives us an idea where the market's been, but pending listings gives us an indication of where the market is today and where it's going. One of the surprising things we found in this month's market report is in our previous market report, we had 128 pending sales. This month, it's up to 162. Why that's important is it's the first time in 3 years that we've seen more pendings than we actually have actives. We haven't seen 162 pendings in any given month since summer of 2020. So that's a big change in our marketplace, gives us an indication that homes are still selling fast. There's a couple of reasons why that number is so high. First, we've seen more houses coming on the market. So as more houses come up, more are going under contract. Remember that constrained market that we're in. And then also, we're also seeing more people head towards new construction. So when you purchase a new construction house that's not finished, that pending might show for a couple months where a traditional sale might only be showing pending for 30 to say 45 days. So we are watching that because we're seeing quite a few houses go on the market. It's going to be a key indicator of what to expect this summer. Another key indicator we look for in today's market is the solds and also the absorption rates. So last month we saw a average sold price of $616,000, which is actually still trending higher than what we saw last year. We're seeing a 5 to 6% appreciation in homes compared to last year's prices. So the market still is increasing in value. There's a couple things that we're paying attention to. One is the market between 650 and 700 seems to be a little bit of a slower market compared to the market above and the market below. And another trend we're seeing is homes that are priced over $900,000 is becoming a little bit more of a normal, but in some cases even more of a buyer's market. So that market is softening a little bit. Sometimes that tends to trend down. So we're going to see what that looks like as we go through the spring. And now absorption rate, something that we've been following. Our absorption rate actually increased stronger towards the seller's market last month, where now we're at 2.08 months of inventory. So that's still extreme seller's market. And then another surprise is we went from 99% list to sales price, and now we're at 100% list to sales price. What does this all mean? Well, we're starting to see prices continue to increase as we head into the spring market. So what does this all mean? Well, almost every day somebody's asking me about a recession, or we get headed towards a recession, and what that might look like for the real estate market. In some of the research that I've done, I found an interesting fact that it appears that in the last nine recessions that we've had, only one of them has resulted in lower prices or a decline in prices. And unfortunately, it's the one that we most remember. So are we headed into a recession? Well, it's possible, but what does that mean to the real estate market? Well, we're at 100% list to sales price. We have 2 months of inventory, which is extreme seller's market. We have more under contracts right now than we've seen in 3 years of market time. And we're seeing people use real estate to hedge against inflation. That's one of the things that comes up when we talk about recessions, is inflation and prices going up, which of course adds equity to the house. So if you're waiting to buy a house, you're waiting for a foreclosure market, you're hoping more houses could be available, I think you might be waiting for a long time. I expect this low inventory market to continue through this year, but it might take a couple years before the market's able to stabilize. If you have any questions about what this means for your investment, what are the opportunities in the market, how can you take advantage and make sure you're doing the right thing, please reach out to me. You can reach me at 406-926-6767, and we look forward to talking to you soon.